All right. Hey, everybody. This is Ron. How you guys doing? Let me grab that question box. So there is a question and there is a chat box. You guys can use either one. I love the chat box, but that's okay. I'm going to open up the chat box and I'm going to say, hello, everyone. Happy Thursday. Oh, that was only the panelists. Oh, geez, let me get the entire audience. Hello and happy Thursday. Let's try that. There we go. All right, chat box is open, questions open, and guess what? My internet works. Were any of you guys here last night when I was having, oh dear, when I was having a heck of a time? Hey, Henderson, you were here, yeah. So I live near Allentown. Hey there, Neil. And I moved from Allentown to Breiningsville, which is just about 20, 30 minutes west, back to farm country, thank God. And apparently they were having internet issues. It just wasn't me. It was the whole town. And apparently one of the managers, supervisors for the internet company was also in our area and he lost his. Well, I guess that helped expedite the problem. But I took no chances. So I went back to my old house, which is under contract, but it's not sold yet. And I had the internet rehooked up just for today. So I am back in the old house. We're going to have super high speed internet. There'll be no issues. Silas and I were playing around. It's all good. So we're going to kick off at the top of the hour, but I just wanted to apologize for last night. I don't think that's ever happened to me in a presentation before, ever. And I've done hundreds, probably thousands by now. Hey there, Tim, how are you? Henderson, you're in Barbados. Ooh, very jealous. Nice warm breeze. Here in Pennsylvania, we just got some freeze, dip below freezing a little bit, which it's due this time of year. My goal is to have you guys out of here by the top of the hour, if not sooner. We are going to look for the hottest stocks going into week's end or year end over the next 5 weeks. You will be sent home with a ton of great trading ideas. And then we're going to look at some of my most favorite trade ideas, even to kick off the new year. So grab your pencil, get ready, take screenshots, whatever you want. It's going to be a lot of fun. All right, see, more folks are coming on in. There's two places for you guys to communicate with me. There is the chat box and the Q&A box. Feel free to use either one. I can see the chat box pretty easily. If you guys want to list where you're listening in from, feel free. I'm from the Allentown, Pennsylvania area. I might sound a little Dutchy. I apologize for my words, sort of backwards at times, my sentences. Does anybody have an idea which is one of the stocks we're going to talk about today? Let's do a test. So Jeanette, Hubert, and the gang, they invite me in 2 or 3 times a year because they are pretty much the only people that I will do a live event for outside of my own database. I've known those guys for quite a few years. We're friends. It was nice to meet them. We could actually travel. But I come in 2 to 3 times a year and I give you guys very similar stocks. And I can look out 6, 8, 10, 12 weeks, 6 months in advance and tell you which ones are due to take off at a specific time. Do you remember what they are? Some folks are typing in Tesla, Visa. Interesting. No and no. We have an Alibaba. That would be a no. Apple does have seasonality to it, but one of the best times to trade Apple is actually bearish right at the beginning of September. Oh, you got it, Henderson. Gold is one of them. Domino's is another we're going to talk about. So when they sent out those emails, I told you guys, well, I told them, I said, hey, let them know we are going to look at the hottest stocks for the next few weeks going right into year end. The bonus is I'm going to give you the ones to watch to start the new year too. I come from farm country, Pennsylvania, so the saying is, when the sun shines, you got to make hay. The sun is shining on the markets traditionally once we get into the beginning of November. It has not disappointed. So it's been already about a 2.5 week love fest. And usually we have a couple more weeks. We have another month until the market takes a 2-week break, and then it re-energizes in January. So we've gotten gold and dominoes. FedEx, we did talk about FedEx once. That's a very good memory. But gold and dominoes are frequent offenders, and we love that. We love when they do the same thing over and over again. But there are still 2 or 3 others out there that I always tell you about. And one of them just started jumping already. Do you guys remember? Oh, hey there, Reg. How are you? William, how you doing? William, I'm not sure about that one either. I don't know the Chinese car manufacturer. There's a question from Mary. Mary, this presentation that we're going to do today, it's live. It is not a recording, and it is not a PowerPoint deck. What that means is we're going to be very interactive, and we're going to look at the software, and we're going to give you tons of great trading ideas. Hey, Reginald, I hear you. Getting a little older, getting a little bigger. I hear you. All right, I have about 2 minutes till the top of the hour. A big warm welcome to everybody. You can communicate in the chat box or the question box. You can ask your questions, and you're welcome to ask questions as we go through the presentation. I can answer them as we go along. So because I'm at my old house and not my new house, just for today's presentation, it's funny when that bell rings, my cat knows that I get up, and she's like, it's treat time. I know you're gonna get up and stretch. It's like a dinner bell. It's hilarious. We used to have a couple cats. They passed away, but when there was a couple of them, you would get up and it was like gerbils. They're just like everywhere. They're like, okay, the dinner bell's been hit. Here we go. I know you're gonna move. We're getting food. All right, let's just check this out. Hey there, Neil, where's the chat box? You should be able to see it on your screen. I'm gonna go ahead and type in hello and happy Thursday again and see if that pops up for you guys. It says I'm sending it to everybody. See if that helps. I don't know how they have it set up. Maybe you can't communicate with me, but you can definitely use the question box. David, how long is this going to last? My goal is to have you out of here in under an hour. So we're gonna wait about 30 to 60 seconds and we're gonna go. Steve, I do not know if TradeThirsty is recording this or not. You'd have to ask them. All right. Okay, guys, top of the hour. What do you say we get going? Can everybody see my disclaimer slide? If you can, we are gonna rock and roll. Wonderful. I'm getting yeses. A couple more yeses. Yes. Okay, perfect. Here we go. All right. Hey, everybody. This is Ron Haydt at Financial. Happy Thursday. Hope you guys are doing absolutely fantastic. It's great to be here with you. I know we were trying to get together last night. We had a technical issue. I did not have internet. It literally died. And we are back up and running today. If you ever see me in a presentation, you'll always see the disclaimer slide. And I have to say this, that everything in this presentation is for educational purposes only. And past performance is no guarantee of future performance. Trading the stock market is risky. You get the idea, or I sure hope so. All right, so here's the deal. I've known Jeanette and Hubert for quite a few years, and when they invite me in, I come running. One, they're great folks. I love working with them. And the reason I get to come back is because the trade ideas that I give you guys work. If they didn't work, you guys would tell them, hey, Ron's so full of baloney, we don't ever want to hear from him again. And it's just the opposite. I'm going to do the same thing today. You guys are not just going to get the top 10 stocks. I'm going to flood you with trade ideas. I'm going to show you why they do what they do with proof out the you know what. It's going to be a ton of fun. So when I first came in with TradeThirsty back in 2019, so we're talking about a year and a half ago, I came in with these trade ideas, these specific ones. A couple weeks later, and look at those timelines. We're only talking about a month or so. Not bad. All 4 triple-digit winners. And then I said this, and this was my quiz before we officially kicked off. Do you guys know the one stock? Now, I've been with you since May of 19 at TradeThirsty. I tell you about this one stock you're supposed to watch, and it's the Mouse House. And what happens to the Mouse House typically in November? It jumps higher. Now, this is November of 2019, and the stock jumps 100%. The long call gains 100% right on schedule. So this is May a year ago. I could look out into November and tell you which stock to watch, all based on fact. Then I said, oh, by the way, when we get into the end of 2019, gold, gold, gold. I don't care if you're a gold bull or a gold bear throughout the whole year, but there is one time this sucker literally never loses. It's a very, very specific 8-week window. And just like that, gold goes bonkers. Then, and by the way, that was 7 straight years, and we're talking about $276 call option was worth $845. Talk about kicking your new year off with a bang. And then I was back in May of this year because you guys wanted me back. This time I gave you 4 other stocks, and you guys are right, Joe and some of you others. Amazon was one of them, and they went up right on schedule. So then Jeanette said, hey, Ron, would you come back in the summer? Folks are asking, what's going to happen with COVID, et cetera. I'm like, hey, it doesn't matter what the thing is in the market. Either these things are going to move or they're not. So in August, I gave you these 3. Some of you guys said MasterCard. You were right in August. And this is what happened. They were all in under 3 weeks. I was live with you guys right now like we're doing. I said, hey, watch these 3. And this is what happened within 3 weeks. So now I'm back, and we're going to talk about which ones to watch right now going into year end. And as a free bonus, which they didn't tell you about in the emails, I'm going to show you which ones to watch to kick the new year off with a bang. So let's do this. Now, when I start doing these presentations, I like to ask this one question. What is the #1 challenge we face as traders every single trading day? And I would say it's this. We will put forth the effort and the work. We're going to try to find the absolute best trading idea for the next day or the next week, whatever it is. But when it gets down to it, it's still a 50-50 coin flip. We still don't have, besides our own opinion, which is completely biased, a great way of knowing which one is going to go higher or lower as we expect. Well, what I'm going to do now is I'm going to change all that, because in the next 3 clicks of a mouse, I'm not only going to solve that problem, we're going to look at a treasure trove of trade ideas that soar. So here's what we do that typically soar this time of year. We're going to type in spiders. We can type in any symbol to get inside. We get inside financial. At this point, we are 2 clicks away from seeing the top trade ideas for the weeks ahead. We click on screen, we click on seasonality, and the webinar is pretty much over. We have asked the software to find stocks that rise at least 5% or more, very specifically over the next 5 weeks, and we want their historical accuracy 70% or better, meaning they're winning 7 out of 10 years or better. And all I do is scroll down, and this is what we promised in the email. These are the hottest stocks for the weeks ahead, period. No ifs, no ands, no buts, no whats. This is fact, which makes this fun. I'm going to get my little editor out here, and I'm going to circle these 5 columns right there. Those 5 columns is one word, DATA. All we've done is we go out and buy data. Morningstar, CBOE, we just buy data. We crunch that data. So those 5 columns, if you are an engineer, a scientist, someone who likes math, This is zero opinion. When I come to you and say, hey, check out Toll Brothers, that they actually historically rise 8.92%, 78% of the time, or I say to you, hey, check out EBS, they rise 83% of the time, all I'm doing is reading to you. I'm not telling you anything. This is the stock telling you precisely what it does. Period. Now you might think, well, seriously, how could that be? The only way stocks can go up and go down is based off of two things. It's big money. Big money sends stocks up and down. Now I'm going to assume we're all retail traders and there's no institutional hedge funds here that snuck in. If the market was open and all of us collectively tried to go buy 1,000 shares of Toll Brothers, or 1,000 or 10,000 shares, frankly, we might make one blip on the CNBC ticker and we're done. So for stocks to have these incredible track records of moving higher 80% of the time, 83% of the time, 87% of the time, over the next 5 weeks, that means the big money is doing it. We can't cause this to happen. Now the question becomes, seriously? Number one, yes, these are facts that we're looking at. There's no human manipulation of data here. And number two, does it really matter why they do it? Don't you want to know when they do it and be ready for when they do it and then ride their coattails? And that's what I do with you every time we come in. I show you these trade ideas. I tell you which ones I think are the best ones. We call the herd, and then we come back in a few weeks and we say, oh my gosh, they went up again. You must be joking. Now, the nice thing about big money, and we're going to be looking at this time and time again, they have all the money. They have all the money to do the research. We don't know why they buy these stocks at this time of year or why they sell those stocks at that time of year. They just do, and the proof is on your screen. But benefit to us is when the big money commits, they're going to be buying so many shares because that's what pushes stocks up and down. They have to layer their positions in over days and weeks. Where you and me, we're retail traders. They often make fun of us because while you and I might have, whether it's $10,000 or $1 million, it's nothing compared to the big market. We are irrelevant. We're a guppy in the ocean. So when they start buying, what you see is they can't simply just get out. They can't just say, you know what, we're going to buy all our shares today and then, get out in 3 days. They'll cause it to crash. So what they do is they buy over time, and the stock goes up. And when they sell, it creates the same thing. And you get like a wave in the ocean, this ebb and flow effect. Well, when we know the period of time they're going to do it, AKA now, we can jump in. We know when they're going to exit, so we get to make or try to follow them everywhere in between. So I'm going to show you a simple entry and exit system. You're probably just going to shake your head because it's so easy to follow. And all I can say is this stuff works. It's nuts. We were all taught the market was not, it's very random. There's no true bias built in. Well, guess what? Human beings work at the hedge funds. Human beings program the algos. There are patterns. People create patterns. And it's crazy to think that some of these companies have been publicly traded 20, 30, 40, 47 years in the case of Disney. And yet we see these massive percentages. It doesn't happen for the whole year. It's very specific windows on each stock. So it's just craziness. Now, let me go over here and erase all these drawings. I'm gonna get my pen back. Now, I first told you that those right there, it's all data, right? In fact, let's make this, let's erase and get my pen. And let's use the same color. I circled this in pink. And I said to you, those 5 columns is data, D-A-T-A. Very believable because it's just numbers that we've crunched and we do it in about a millisecond. Now, that other column, which is probably getting your attention, you might say, well, Ron, just because these stocks have done this historically, that doesn't mean they're going to do it again this year. I would say, you know what? You're absolutely right. We don't know if these stocks have a great chance of doing it again this year because we only have the past history, which is pretty impressive. So what can we do to cull the herd even further and eliminate the weak links and only look at the shiniest apples on the tree, if you will? That's where stock score comes in. We take into account F, the fundamental analysis. That's a bad looking F. We take into account C for charts, the technical picture, S for sentiment, and the big S for seasonality. We take all four metrics and produce a buy and a sell. That's why when you look at this screen and you see AAWW, and you might say, whoa, holy mackerel, this stock goes up 11% over the next 5 weeks. That's over 2% a week. And it does so 8 out of 10 years. That's a pretty gosh darn good hit rate. Yeah, but there's a problem. Something under the hood in the fundamentals, maybe it's earnings data, balance sheet material. Maybe the chart is starting to break down. Maybe the sentiment, for example, maybe option sentiment, analyst ratings. Something is wrong here and it's overriding the seasonality. So in this case, yes, AAWW, very seasonally bullish, but there's something wrong under the hood. So we skip that and we're going to eliminate AAWW. We're going to eliminate EBS, EBS, anybody else on this list. So here's what we're going to do. Erase all those drawings, get my mouse back. We're going to scroll up. We're going to go to advanced filtering and we're going to take the stock rating and we're going to take that from both and slide it over to buy. At this point, if we scroll down, now the sells are eliminated. And guys, you are now looking at the hottest, the absolute hottest stocks between now and Christmas, the end of the year. SBGI, Copart, Toll, Assured, DAR, MTOR, CBRE, AYI, Allergan, all of these are on buys. Now I have it sorted by percent increase. So we're going to see the biggest movers. This is only over a 5-week period. You also could come over here and sort by probability of increase and say, holy crap, BCO is Brinks. You mean to tell me 88% of the time they go higher? That's almost 9 out of 10 years. When we start looking at some other data, think of this. The stock market usually has a correction, a sell-off, once every 10 years, ballpark. When you start looking at stocks in the 80s, upper 80s, 90 percentile, the theory is this. Can you imagine that if the only year it loses is when the market is getting crushed? And as long as that's not happening, all that stock ever does is win. Bingo. So you can do it by either one. We can go BCO or we can do the biggest winner. Now, you might say, okay, Ron, I'm with you so far. But how on God's earth do we know which one to pick here? This is one of the probably the most powerful things that I was ever told, and it's actually pretty simple when I thought about it. And when I first started learning about the markets, somebody told me, hey, just find stocks that you enjoy, maybe buying or following, and just keep trying to trade them over and over again because you build a little bit of a familiarity with them. You become familiar with them. You might say, well, what's BCO? That's Brinks. Maybe you like Brinks. Maybe you like Prudential because you're maybe in the insurance business. Or maybe you're in tech, so you like NVIDIA or BioMarin, Texas Roadhouse. You guys can pick whatever you want, but that's what I would do. Or you might say, hey, I don't really know any of these. Let's start with the biggest winner then. Let's take a look at BCO, 88% track record. Hey, that's still over 1% a week. So what we can do now is we can just click on the chart, or I'll just show you how to do it. Scroll back up, and we're going to click on search and click on seasonality. Now, one thing I want to show you here, the SPY is the S&P 500 ETF. And if I scroll down on this page, look how flat this line is. And by the way, let me show you this. So historical data is the solid line. We can see the Corona crash and the Corona rally. The future probabilistic price is using the stock's own history as our guide every week throughout the year. And we can see that there's this slow push higher, and then it sort of goes nowhere. Here's what happens. Usually between November now and May, the market outperforms to the upside. It does really well. But then once May comes into October, it basically goes nowhere. You hear a lot of these pundits on TV say, oh, the market crashes in the summer. Well, the market can crash anytime. But I hate to tell these talking yo-yos that the facts tell you, no, the market doesn't crash every summer. It actually goes nowhere on average. Could a crash happen? Sure, just like today it could. But on average, it doesn't. But you can actually take your mouse and go week by week and see how your stock performs. So if I take you on the S&P between now, watch this, we're going to go December 16th, December 23rd, January 6th, even into the beginning of January, the SPY goes up 76, 77% of the time by 1.9%. That's like 2% over 7 weeks. Let's back it up. Over 4 weeks, it doesn't even go up 1%. It's not moving at all. This is why when you guys go screen and you then click seasonality and you scroll down, you can see the power in the data. Guys, over the same period, the S&P doesn't even go up 1%. Would you rather trade the S&P, or would you rather consider saying, maybe we should look at SBGI because it does literally 11 times better than the S&P, and it does it at a better accuracy rate. And the same thing if we sort of a probability of increase. Remember, the S&P was in the 70s. BCO Brinks, 88%, and it still does 6 times better than the S&P. This is how we have a chance to beat the S&P, but not just try to beat it. We're beating it with data. We're beating it with facts. I like to say the facts will set you free. There's no opinion in this data. Those 5 columns, this is like the stock sitting on your shoulder, whispering into your ear what it does. Isn't that what we always wanted? It's like, hey, stock, what are you about to do before you do it? We're using the stock zone data now to see that. All right, so let's go back and hit search, hit seasonality, and let's go ahead and type in BCO Brinks. We come down, again, here's the Corona crash, it's starting to rally, and we can see that there's a line here where it actually goes higher. Now what's neat is if I take this just to get rid of the old data, we can see the ebbs and the flows a little better now. Now this future probabilistic price, it's literally like a treasure map. It's a GPS for how the big money pushes your stock around. All right, let's take our mouse and go week by week. There's 1 week. There's 2 weeks. Ooh, it's up to 72%. So if you held this stock historically over the next 2 weeks, it goes up by almost 2%, 72% of the time. 3 weeks, ooh, it jumps to 80%. Now you're talking. I love stuff 80% and over. Anything over 70 is good. Over 80 really gets me excited. 88%, 4 weeks on BCO. And the move is 4.28%. That's just the average. So what does that mean? You take all the years that BCO is publicly traded, that's the average gain. Some years it may have gone up 8%. Some years it may have gone up 0.8%. Now, if you want to see how many years your stock is publicly traded, just scroll down. Brinks, 25 years it's been publicly traded. So if I scroll back up here, for 25 years, think about that. We had a Bushy, we had Obama, we have the current president, we've had gold up and down, dollar valuations up and down, we've had the coronavirus, well, that's this year. What about debt ceilings? Remember when that was a thing, when they didn't want to raise our debt and there was filibusters and all sorts of things they didn't want to do? Yep, we've been in wars. We went through 2008, 2009 massive market correction, you name it, and look what happens. This is when the big money pushes Brinks. Here's something else you guys are probably putting together in your head already. I don't get married to stocks. I am married, but I don't want to get married to a stock. I want to put my money in when I know it has the best chance to make me money. And by you taking this mouse over the next 5 weeks, this tells me if I was ever going to trade Brinks throughout the entire year, this is when the big money is behind it. Well, Ron, how do you know that? The big money is the only thing that can send stocks up and down. You and me around the breakfast table saying, oh, I think Apple's overvalued, or maybe Brinks is going to pull back, it means absolutely nothing. We don't have the ammo. We don't have the money to cause that to happen. This is what the big money does. And better than that, look what Brinks does over the next couple weeks. Look at that dotted line. That dotted line literally goes sideways to down. Okay, it goes up a little bit, and then it's dead weight the rest of the year. There is no clear bias anymore. So what does that mean to me as a trader? Oh God, this is easy. I may not be the sharpest tool in the shed, but I love pictures. That's how I'll learn. There is only one window throughout the entire year. Right there. That is when I want to trade Brinks. So would I not hold it the rest of the year? The answer is no. There is no longer a bias. I want to be in when the big money's in, and I want to leave when the big money leaves. Why would you hold a stock for an entire year when you can visually see the only time the big money pushes it up in a big way? How about the other 8-9 months of the year, we go take it and find other stocks that do this, and we keep being very surgical and move our money from spot to spot. And you might say, well, it sounds exciting. And I would say, this is May, August. This is my 5th time in 2 years coming into TradeThirsty. I do this same presentation with you with different stocks, sometimes the same stocks, every time. And we end up seeing the same thing play out. We don't hold Disney all year. We don't hold gold all year. We're not going to hold Brinks all year. We're only going to hold it in the money window, which is right here. That's how I would do it. Okay, let me go ahead and erase all these drawings. Now that we know that this stock rises on average 6% over the next 5 weeks, let's go take a look. We'll use Thinkorswim, and let's type in BCO. And by the way, I have a great memory, which I hardly forget anything, which is really bad for a marriage, let me tell you. And I don't think we've ever talked about Brinks in a TradeThirsty event. And look at Brinks. This is a 1-year daily chart of BCO. Here is May, chop, 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 July, August, chop, 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 September, chop, 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 October. How many of you guys would have been lulled to sleep saying, man, this thing's never going to rally? The whole market's at new all-time highs. There's no way Brinks is ever going to break out. Could you imagine talking to one of your friends and saying, oh, I hear you, but psst, if it's ever going to break out, it's going to be November. And in fact, I would expect at least a 6% rise on average. Really? And look what happens. The calendar turns to November. Look at Brinks. There's the earnings report. It actually went down on earnings. How many times have you seen a stock have great earnings and the stock sells off, but then later on, it magically goes higher? I don't know if that's the big money trying to do just to jerk you out of the position, shake the lemmings from the tree. I don't know. It doesn't really matter. We know when it goes. Look what happens. The stock goes from the 40s into the 60s. We go to financial. What do we see? Here's November. There it goes. You can't make this stuff up. Even from today, Brinks still has an average of 6% gain in 5 weeks. It's still over 1% a week. Now, there's something that's going to be a common theme on these charts. And when you guys are here with me with TradeThirsty, like I said, I usually come in about 2 or 3 times a year. This is my last one as far as I'm aware of. The orange line on my screen is the 50-day, what they call the SMA or the MA. It is an institutional moving average, and this is key. Nothing ever works 100% of the time, but I want to tell you something. Look how many times it gets above the orange line, below the orange line, above the orange line, below the orange line. It almost sounds like a song. Above the orange line, below the orange line. Why is now the time it actually worked? Because the data at Financial, all we're doing is doing numbers for you, crunching the data. This is one that goes. You could literally sit back and say, I bet you this is the one where it's going to break. Everybody else is going to look at this and say, oh, it's in a trading range. Oh, there might be a head and shoulders. Oh, there might be a triple top, a quadruple top. Oh my God, it's a 6-headed top. It's Medusa. And then you're a deer in the headlights and you're not doing anything. Instead, you went to financial and said, oh, baby, November, it's the time. And then there it goes. This stock is up over 20% in 2 weeks. And if you had access to financial, you would have known that. The other thing, look at the volume. When the stock, as we're going to go faster here because I have 4 others I want to look at. When the stock goes above the orange line, which is the institutional line, in the seasonal window, you are going to shake your head. You are going to laugh at how well this works. You're going to say, no way, no way. The orange line didn't work any other time. I'm like, yep, you're right, it didn't. I totally agree. How did you know it was going to work this time? Nothing's guaranteed, but we know how the stock trades. We know what the big money does. And then look at the volume come in. By the way, green bars are up-day volume when the stock finished positive, and red is when the stock finished negative. Notice out of nowhere, post earnings, I can't stress this enough, the earnings report had nothing to do with this move initially. It was when the stock entered the window that the big money commits. Maybe that was the big money purposely trying to sell to rip people out of positions because they knew they were about to buy it, and then it turns on a dime and jumps over 20%. Well, you're not flying blind. You now go to financial and say, we know when they're going to do it, and it's already game on. And by the way, the red line is just a trailing stop line. The red line's a 20-day EMA, but the trigger is the orange line. Here I zoomed in. Look at the earnings report. Does anybody here do candlesticks? I love candlesticks. You had bearish engulfing post earnings. Look at the volume. It was horrific. This is not good. This stock is probably going to break out of this range. And then you sit there and laugh and say, oh no, it's not. It's probably not going to happen. Watch how this thing turns on a dime. And there it goes. All because of the big money. Now, that was BCO. I also told you about SBGI, remember? We went screen, we went seasonality, and we sorted by percent increase. And SBGI was the biggest winner. Now, we already did BCO, who was the #1 most frequent offender, if you will, at 88%. Well, now SBGI, it's almost 80%, but their move is almost double what BCO is. So we can go to search, we can go to seasonality, and let's type in that one, SBGI. Now, I have no idea what these guys do. I don't care if they make widgets with little unicorn heads on. All I care about is money. We look down, what do we see? We can move our mouse, and we can go 3 weeks, 4 weeks, 5 weeks, 6 weeks. 83% of the time over 6 weeks, this stock goes higher. And it's 12%, 13% over those 6 weeks. Now we're talking about 2% a week. When stocks have double-digit percentage moves, if you're trading options, we're now talking about potentially triple-digit returns in very short periods of time, which is what I've been doing for you guys in May. I came back in August. You saw the winners. I gave you the stocks. So how is SBGI doing? Let's just go to a chart on Thinkorswim. SBGI. Oh my God, it's just like Brinks. The thing hasn't done squat. In fact, at the end of October, they were starting to break it down. And then just like that, look what happens the moment it gets above the orange line. Post earnings, look at, here was earnings again. Nothing happened for 3 days. It was like, hey, let's have a big sell-off day, make people think the stock's not going to go so we can go scarf it up. And then it goes from what? Once we get above the orange line, it goes from around $20.50. Today it closed at 26. That's a 30% gain in 7 days. And it was as high as what, 29? Are you kidding me? It was almost a 50% gain in 2 weeks. Yep. And that came out of if you like technical analysis, it came out of a pattern that looked really not good. Nothing was going on. Look, it's above the orange line, below the orange line, above, below, above, below. But the moment we enter the seasonal window and it pops the orange line, it is game on. And then the stock just goes higher. So this is what I do for you guys. I showed you 2 right now. You saw the full sheet. When I was with you guys in August, so we're talking 3 months ago, I said to you, there is one stock that I want you to watch. Does anybody remember? The attendance has really gone up since we first started, from what I can tell. But when I was here in August, I told you guys, I'm going to look out 3 months in advance and I'm going to tell you one stock you have to watch the moment we hit November. What was that stock? It was the Mouse House, right? It was Disney. If we come down, look how Disney trades. And by the way, just for the record, if you don't know, I am 47 in 3 months. Disney's as old as I am, although my wife says I'm about 8. Look at these ebbs and flows. There is a clear pen color. There is a clear ebb and flow. Now you would say, wait a minute. If Disney's publicly traded 47 years, we'll even do the years, 47 years, how could this possibly be the case? Now, guys, just for background, I mentioned where I came from. So I'm from the farm country of Pennsylvania. I grew up north of Allentown and far away from the stock market as you could get. Never went to college. You know, in high school, they don't teach you about finance. It's almost like they purposely don't teach you finance to keep everybody dumb when it comes to money. So I had no idea about the market. And then one day I read about it and I was like, oh, the stock market looks interesting. So I bought tons of courses, paid a lot of money to people who didn't know how to teach. I think we've all been there. And everybody kept saying the market is random. There's no biases, blah, blah, blah. You got to have this secret something or whatever it is. So that's where I came from. Well, fast forward 20 years, which was when we got started in the markets, we built financial and we started to look at the data of what the stock does. And this is the absolute opposite of random. There's clear biases on your screen. Disney goes from, what is that, about maybe 2% up as high as 18%. That is a 16% run very clearly from November into May. And then when you would think the theme parks, I forgot to ask this question. My question was going to be this. Hey, when do you think Disney stock price performs the best? Do you think it performs the best in the summer when the theme parks are full and the parents are pulling their hair out? Or do you think maybe Disney performs the best around Christmas and New Year's? And I usually get 50-50 answers. Well, you're looking at the treasure map. You can actually see when most people might think that, the summer, May and June, before they go back to school in September, when the theme parks are just filling at the brim, guess what the big money does? They are selling to the retail traders. They're laughing at, quote, us. Oh, those retail traders, they don't know what they're doing. They think just because the theme parks are full, the stock's going to go up. Oh, heck no. Look what they do. 47 years. If you don't understand data, to get a line to go down at that angle for 47 years is incredible. That means the majority of years, it must do it at the exact same time. And the same thing goes for the ups. That's what makes Disney one of the best seasonal candidates. For me, if we had to do like an elevator pitch on how seasonality works, this is the stock I would use. It's absolutely incredible. And it's not like it's very jagged, right? It's not that at all. It's just the opposite. It's like a wave in the ocean. Okay, so I told you guys to get ready for Disney in November, right? Right there's November, and here we go. So if I take you to a chart of Disney, oh, by the way, if I move my mouse, look at this. Between now and April, 85% of the time the thing goes higher. 47 years, 4 decades, almost 5 decades, 8.5 out of 10 years, this thing wins. Think about that. Once a decade, we get a market crash. Disney is one of those stocks that literally, unless the market is crashing, all this thing does is go up. So if I take you to Thinkorswim and we type in Disney, I'm going to take you back a couple years and I want to take you over here to 2016. You might say, why the heck are we going back to 2016? Well, if this seasonality crap is real, I'd better be able to show you proof in spades. This shouldn't be just a one-off where I'm going to pick only the one winner. mean, that's why I keep coming back to you guys, because we keep looking at these stocks and they keep doing the same thing. It's almost getting to the point where it's like shooting fish in a barrel. That's a weird analogy, but dang it, it keeps happening. So here's 2016 when we brought financial out to everybody. I was asked, what's one stock you would say come the holidays? It's Disney. Look what happens the moment we get to October, November. It pops the orange line and Disney goes from the low 90s all the way up into the 1 teens. You've got to be kidding me. So somebody said to me, I'll never forget this. They said, wait, so if you get in November when the stock gets above the orange line and I get in, let's say around 93, would you tell me that I would end up holding this stock all the way to April 10th? I said, technically, yeah, because that's when it finally closed below the trailing stop line, which is the red line, the 20-day exponential moving average. It's a great trailing stop, and it's all end of day. So we can all be doing our things during the day, you know, whether we're a teacher, a doctor, a nurse, a bus driver, if they even exist anymore. You know, we could be a landscaper. Maybe you're in Singapore and you're sleeping when the US market's open. This is all end of day. Stock gets above the orange line in the seasonal window, we go long. When do we get out? When it gets below the red line. And the guy said to me, I'd have to hold this stock for 5 months. I said, well, I can't tell you what to do, but I mean, geez, what do you do? Hate money? I mean, all the thing did was go up. A $90 stock that goes into the teens, that's a what, 15%, 20% move? This is almost a 300% win. And then look back to the orange line. There's the earnings report. The stock goes up and then it rips. Look how the volume went up. And I want to zoom in here really close to draw this point home. That little phone is earnings inside Thinkorswim. Look at that day. The day before they started buying, 2 days before they started buying, 5 days before they started buying. All of a sudden, the green bars start beating the red bars, and there is a surge the day before earnings. Boy, it's almost like the big money knew what they were going to do before they did it. Just think about that. The big money is what makes stocks go up and down, not you and me. I'd love to think we have a lot of money, but we don't. Not compared to the big money. They bought this ahead of earnings. The stock jumps, and then it still goes. Well, that was 2016. I mean, that wouldn't happen again. Look at this chart. Look at the ebb up and the flow down. When did I tell you the May peak was? It was in, I'm sorry, when the peak was in May. We go back, where is it? The peak's in May. Once we get to the end of May, down she goes. What was Disney's chart? We get into May, down she goes. So in 2017, which is right here, Disney started rallying in the summer. My wife and I were headed to Australia. We were going to be gone for 3 weeks. I had a members session and everyone was asking me, Ron, Disney's running ahead of schedule. It's running in the summer. I said, well, it can do all at once in the summer, but we know for a fact, reminder, we know for a fact Disney does not usually go higher. In fact, they push it lower. They're shaking the lemmings. I said, this looks to me like they're summoning the sheep for slaughter. They're getting the retail traders in. The stock is breaking out. And I said, you watch come that earnings report, they're going to pull the rug out from everybody. They ramped it up, they sold it off, and then down she goes. Could you imagine not knowing this and you buy the breakout at 108 or 110, and then a couple days later you're down at 100? You lost 10% of your money. Well, guess what? You go to financial and you say, you turkeys are not going to do that to me. You are not going to take that money away in the summer because we know what you do. You sell, you do not buy. So when you come here, you're not caught in this carnage. Well, guess what happens? We get into October. Remember, it just keeps going down, 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 down. It pops the orange line the day before earnings. And look what happens. Oops, hang on. Look, magically the volume pops, pun intended. The volume pops, we get above the orange line. In November, stock goes from 100, and before you know it, we're at 110, then we're at 112, and then we finally get below the red line. Did this one live up to the exact timeline? No. So what happens when stocks don't live up to the exact timeline that they previously have? The red line is your trailing stop. Sometimes market conditions may change, but just going back 2 years, The pop happened, but this time it ended sooner. Okay, well, that was then. Let's keep going. Let's keep going. Then we get into November in 2018. And I was in Vegas for Christmas in 2018, and I was talking with a trading friend of mine, and he goes, hey, you know, we were just talking, like, yeah, Disney didn't work this year. So we were talking about it a little further. Remember, in 2018, December was the worst December on record in the stock market. It was never more bearish. So how did Disney work? All right, here's October, here's the earnings report. I'm sorry, November, and there's the earnings report. Disney went up on earnings. It's already above the orange line. Fantastic. We're going to get in. Here they go again. Hey, nothing's ever perfect, but hey, it's game on. We're going to buy the stock or a call option at $118. Oh dear. The whole market's going into the worst December sell-off in its history. The moment you get below the red line, the trade is closed. The stock was around 115. Here you are wrong, and you are wrong by $3 whopping on Disney. You never got caught in the next $15 drop because you were out. The momentum never came, never stayed. Okay, so hey, I purposely showed you one that didn't work. Well, how about going into the next year then? Here we go. This is last year. Guys, year over year in August, I gave you this trade idea. And then when I was here in November, around the same time last year, we talked about it too. And you guys gave me a bunch of thank yous. Someone wrote, if I recall correctly, that this trade I gave you a year ago literally paid for their family's vacation to Disney. They take their whole family to Christmas. Look what happened at Disney. The moment it pops the orange line, November 7th, magical earnings gap up. And then the Disney Plus news comes out, and then it keeps going. This was a triple-digit win. What does that mean? Over 100% gain. What about this year? Here we sit. Look what they did right before the earnings report. The earnings report was a couple days later. It pops the orange line. The stock goes from 127 up into the 140s. Check this out. I told you about this in August. I told you to write it down. I told you what to watch for. The orange line is the key. On November 6th, it closed above the orange line. If we go out to March, that option costs $9.50. So a 130 at 950. Today, hang on a second, get my date. On November 6th, let's go analyze. November 6th, a 130 cost $9.50. After the gap up in one day, which is what I was trying to say on the 9th, we're talking about a one-day trade, and you would still be in it. It's 1780. The stock was up so much that day, this was a 100% return in one day. Then it pulled back, then you had earnings right here, and then it goes right back up. 3 out of 4 years, it's done the same thing. So guess what I'm going to tell you today to watch for next November? It's going to be Disney. Now, how about one that is coming up? Let's do Netflix. And we're going to go back to the previous election. In fact, just to show you the point, somebody just asked, why would we look at old data? And here's the reason. Seasonality is just data, no bias. So in order for those percentages to work, I should be able to continually show you proof. Here was when the current president, that still is for now, I guess, when he was elected, and this isn't pro-Democrat, pro-Republican, has nothing to do with politics, okay? They tanked the market. The big money was selling. The moment he got elected, the market went on its biggest run we've ever seen post-election, ever. The S&P, which is the SPY, the SPX, this thing went up 10% in 6 weeks. We've never seen that post-election. So when you see the market gapping up, Carl Icahn said that night, I think he bought $1 billion in stock overnight. Turned out he did quite well. So what do you say? Well, it's November, we're going into the holidays. Netflix is probably going to be a good stock, right? Because people are going to be stuck at home. They're going to watch, being when I say stuck at home, It's cold outside in the Northeast, the northern half of the country. So you're going to say, all right, well, people will be at home the holidays. They're going to want to watch maybe more TV, right? So here's the election. And what does Netflix do? Netflix goes from 125 down to 110. As the entire stock market is soaring, you manage to pick the one stock that dropped 10%. How awful would you feel right now? Yeah, we get it. We feel terrible. I know. But the S&P 500 is basically 80% of the market, if you will. So that means 8 out of 10 stocks are going to go higher if the S&P goes. I just want to highlight, you had to be such a bad stock picker. You had to pick the 1 in 4 that didn't. And of course, it happens and it goes down. Well, then it goes back up a little bit and then it goes sideways into the end of the year. You didn't make any money, but you didn't lose any money. But there was opportunity cost. You put your money in a trade and you didn't make a dang dime. If anything, you got a little older after losing 10% in 4 days. So what do you do at the end of the year? You say, oh, I'm a crappy trader. I got to do better. Oh gosh, gee willikers, I can't believe this always happens to me, right? We get mad at each other. And then we go sell the stock. What if I told you you had the right stock? You just had the wrong time window. Once January comes, Netflix gets shot out of a cannon. Not October, not November, not December, January. Look what happens in January. This stock, there's the election, it went nowhere. You flip the calendar to January and the stock goes from 125, 138, 145. Finally, it gets stopped out over here 3 months later, 2.5 months later. Guys, when these stocks move 10, 20%, the options are increasing multiple 100%. Well, that was just that year post-election. I mean, that wouldn't happen again, right? So now the president's in office for a year. This is 2017. Here is November. Look at Netflix. Doesn't this pattern look nice? Hey, here was earnings. The stock looks like it's bouncing. So you go buy it at 200 bucks. A month later, it's in the 180s, and then it's at 190. You're down 5%. Meanwhile, remember, November and December, one of the most bullish times for the market all year long. The markets are soaring, and you lost 5%. 2 years in a row, you stank up the joint. Watch what happens come January. What? No. The moment we get to January, it pops the orange line. The stock goes from 200. Before earnings, it's at 226. You're up 10% before earnings even happens. Then it's up to 300. You just made 50% on your money in 2 months again. On a stock trade, this was over a 500% return, meaning a $1,000 investment was $5,000. 10 grand was 50 grand. Well, that was just that year. I mean, that's not just going to keep happening, right? That would be really silly. Let's go look at Netflix. Now here was 2018. Remember I told you guys, my wife and I went to Vegas for Christmas? Netflix was going down, the market was getting killed. I'll never forget something Jim Cramer said on CNBC. There was a YouTube video of it. You might like him, you might hate him, but he was incredibly honest. And he said this, he did not say that he did it. He said he was aware of it being done, where a big fund would call up a news reporter and say, oh yeah, Netflix, yeah, subscriptions are going to be down. They're going to have margin problems. Their loans might get called. They can't compete with the big, whatever it is. Bottom line, they put out bad press and it tanks the stock. And Cramer said they will do that on purpose so the big money can buy it up cheaper. They often do it to Disney in October. They do it to Netflix in November and December. It's just poo-poo city. Watch what happens come January. Now, this is in the face of a market decline. The market's getting killed in 18. The moment we switch to 19, look at this stock clear the 50-day. We're at 295. We're at 360. We pull back to 320. Then we're up into 367 before you were stopped out. That was over a 20% gain in 2 months. 20% is over 100% options gain. Okay, what about this year? Here's 2020. Now the stock already started to run around Christmas, right before Christmas. Just wait to January. Stock closes around what, 320? We get up to 340. Oh, and then you're stopped out at 326-ish. Okay, so it was a $6 gain if you made it on January 1st. It didn't exactly work amazingly well, but you didn't lose. And then if you wait until after earnings, the stock goes right back up to 350, and before you know it, you're in the 380s. You can do pre-earnings, post-earnings, you can take it through the whole dang thing. The proof's in the pudding. So now guess what stock we're gonna watch when we get into next month? Look what Netflix is doing again. It is just boring people to death and it's doing nothing. And we know no buying Netflix until January 1st. So if I come over here and I type in Netflix, watch this. Look at that vertical move. Look how that goes straight up. And there's an earnings report. You now know this company has a bias to its earnings report. Everyone that's ever told you earnings reports are 50-50 coin flips, they're completely wrong. I will tell them to their face they're wrong, because while they have an opinion, I have proof. And the proof separates the you-know-what from the bull. This tells you that the big money has a bias to earnings. Look at that line. If you hold Netflix, look at this. Even between now and February, it still goes up 82% of the time. But I don't want to buy Netflix now. Look at when that line goes up. You want to know something better? I haven't showed you this yet. If you come up here to best period and you click on that and you say, hey, financial, can you please tell me the best, I don't know, 12-week period of the entire year to hold Netflix that I had the chance to make the most money? Yeah, we can do that. It will overlay a green line, and check that out. Starting the last week of December, and you did see that, January 1st, it starts to run. Every once in a while, it sneaks in the last couple days. Read that green box, read that green lettering. Netflix has risen by an average of 31.34% over that 12-week period, 83% of the time. And I purposely didn't show you this first. I wanted to show you the chart, let you see how it just keeps running, and then hit you with this. Could you imagine watching that stock go nowhere for 2 months and it can't even rally in November and December when the whole market goes up? You decide to short the stock or do something bearish because the chart pattern looks bad. Then the calendar flips to January and the thing takes off like a rocket ship. Now you know. I tell you this every time I come in here. So anybody that took this last year, you did pretty decent. Okay, well, that was Netflix. How about Domino's? Now, I'm going to show you something. I'm going to actually take you, let's do this. I'm going to go back to, my goodness, we can actually go back further. I'll just do 26, I'll go to 2016, so we're running out of time here. Domino's has an incredible track record right around the big game, AKA the Super Bowl. It's just a big game. Watch what happens. I'll take my mouse really quick. Right around the big game, it goes from around 111, 130. Over here, we go from what? 200, 230. Over here, we go from 250, 290. Even in the face of COVID, was anybody here a year ago? TradeThirsty invited me in last November. I said, I'm going to give you guys stocks into the year end. I'm going to set you up January 1 and literally the end of February, or the end of January, beginning of February. While the lockdowns were happening, look what happened to Domino's. It popped the orange line right after the big game. That's all you're waiting for. You wait, you wait, you wait. Pop goes the weasel. The stock goes from 291 all the way up to 374. I want to show you, and I gave this trade idea to you a year ago. Watch what February 14th is on Domino's. This is one of the emails that I received the most crazy stories from. February 14th was Valentine's Day. If you used a June option, I hope you're sitting down. The stock was at 291. Let's just use strike 300. It's easy to remember. It cost $14.50. By the time earnings was out, 6 whole days later, including the weekend, on February 20th, you ready? That 1540 was worth 77.30. Guys, that's 1,500 bucks turned into 7,700 bucks, even in the face of COVID. When I go to financial and you type in Domino's and you scroll down, what do you see? You see this massive rise, right? Well, watch this. Would you like to know a stock that has never lost in all of its publicly traded history? We're going to come up here. We're going to hit best period. And here's my only request when I show you, I forgot to say this. Here's my only request. Because you guys are here, don't give these out to anybody else. This is my gift to Jeanette and you guys because you guys rock. I love Jeanette. These are my best trade ideas. And they keep working year after year because the data says they're likely to keep on going based on performance. No guarantee, but check this out. So Domino's, we're going to move this to best 15 weeks. Right there, we're going to slide down. Look at that green line and go ahead and read that box. Best period, Domino's has risen by an average of 21% during this 15-week period. This is including COVID. This is including the 08-09 crash. Domino's is publicly traded 15 years. Not even COVID could kill this stock. So someone asks me, what about another lockdown? I'm like, if they do it around January, it's probably going to be awesome for this stock. You just can't make this up. It's absolutely insane. This is your treasure map. This is how these stocks trade. Here's another one. I'm going to bring you gold. I'm a huge gold bull. I just like money though. I just want to know that when I put my money in, isn't this what we always wanted to know? If you put your money in, you have the best darn chance to make it. And you're not playing a guessing game or trusting someone else because this is just data. Look at gold. GLD is the ticker. There is only one period, guys. Hey, you gold bulls, you know who you people are. You're always bullish on gold. There's only one window when the data says to be bullish on gold. Now watch what happens if we come up here and we hit best period and we change this to 8 weeks on gold. Just to save time, I know the windows. Oops. 8 weeks, scroll down, look at that. Gold has risen by an average of 7.2% during that 8-week period, 87% of the time. Watch what happens if I show you gold now on a chart. This thing has won in 7 straight years. I'm going to pull it back and we're going to go all the way to 14. We're going to do this really fast so I can have you guys out of here. Gold typically has a pullback between October and December. Ready? You with me? Here's October. Look how they sell off gold. It goes from 130, 115. The moment we get to Christmas, it hits the orange line. You want to watch Christmas Day, literally right around Christmas Day to the first week of January. It's roughly a 7 to 10 day window. You wait for it to pop the orange line, 120, 130. Better than a sharp stick in the eye. Look over here, next year. It goes, this is now 2015? We're going 115, 125. Look over here. Look how they tanked gold in 2015. At the end of 2015, it goes from 110, 100. It drops 10% in 2 months. We pop the orange line, 104, 122. We're talking about a 20% gain. I'm going to zoom in here. Look at this. It just explodes higher. And then we get stopped out over here. Excuse me. So everybody's thinking, oh, gold's going to crash. Look, it's breaking lows. It's gapping down. Oh my God, gold's going to go in the hopper, right? Yep, not until January. Well, that was that year. Let's come over here. They do it again. Look at 2016. Crush gold. Gold goes from 125 to 105. Almost a 20% drop. Pops the orange line. There we go. How about 2018? They tank it going into the end of the year. The moment it pops the orange line, 3 days before the end of the year, 121 all the way up to 129. Well, how about this past year? Hey guys, I was with you. TradeThirsty actually brought me back last year. Oops, where is it? Right here. TradeThirsty brought me back. I think it was right around Christmas. I think they brought me in right before Christmas. This is what I had drawn on the chart. I told you guys this. And I said, look it, this thing is just oscillating lower last year. Wait for it to get around Christmas and it pops the orange line. Right there, it did it. If I go from December 20th And I'm telling you this now because we are only a month away. I am loading you guys up with trade ideas. Just look at this. These, when trading options, we're not talking about some kind of egregious, cost. Hey, Thinkorswim, you want to play along here? There we go. So December 20th on GLD Thinkorswim, come on. And let's say a March option. Guys, this only costs 276 bucks. So if I had like a 5K account, I think I could afford one long call. It's 276 bucks. I told you, pop the orange line. Look what happens by the time you get to January 6th, a 2-week trade. Ready? January 6th, that 140 is now worth 845. And that's what I did for you guys a year ago. The amount of emails I got from thank yous, 276 bucks was 845 bucks in 2 weeks. Talk about paying for all the holiday presents. And now I take you to financial and you say 87% of the time, oh my God, this thing goes higher. 7 straight years. Guess who we're watching this year? So this is what I do for you guys when I come in. I show you the trade ideas. I send you home with them. I show you the ones that work. And then Jeanette says, oh my God, you got to come back. We're getting emails. Everything you keep showing us literally keeps working. And somebody said, Ron, you're a great stock picker. I'm like, I'm not a great stock picker. All we're doing is using data. So if I get run over by a reindeer this holiday season, you guys are going to be okay. I'm just showing you how to use the software. The data will set you free. This is a proverbial GPS on your stock. Instead of wondering what's around the next corner, when you see gold rallying in the first quarter and the gold bulls come out saying, oh my God, the Fed is dead, here we go, you're going to sit there and laugh and say, the rest of the year, there's no bias. We made our money, we're out. By the time everybody else catches on, you're gone because now you know what the big money does. So here's what I'm going to do. I'm going to give you guys my best deal I've ever done. I'm bringing it back one last time. You can thank Jeanette. It's called the mother of all holiday specials. I'm doing it early. When you come as a member and join us, you will not leave because you're going to love it. You're trading with data. Jan recommends this to her friends. Best compliment in the whole world. You wouldn't do that if it was a piece of crap. You're going to look like a putz. Bruce is like, hey, I won 9 out of 12. I'm like, yeah, that's probably a good average because if stuff wins 70, 80% of the time, that's what you're looking at. Nothing's ever going to work 100% of the time. Monica says, and this is what I loved about her. She goes, I'm trading less, staying in trades longer while others are panicking. I'm taking better risk with probability to stand on. And she says, I'm no longer wondering why the stock I picked didn't move, which is everybody's problem. The charts, everything looks amazing, and then it stops going up the day you buy it. Well, now let's go see what the big money does because they're the ones that do this. And this was Bob from August. When I was with you guys in this event, I told you guys about MasterCard, Intuit, Salesforce.com, and what happened? Yep, they went up. So here's the deal. I said the last time I was in, I was never going to do it again. I'm bringing the COVID back one last time. Call it the mother of all holiday specials. Everybody's trying to make some money in the markets. And when you see the price, I think you're going to be blown away. The only catch is I'm going to do 50 and I'm going to shut it down. I don't want to keep selling it for this price. If you go to our website, it's 1,800 bucks. Your deal, the TradeThirsty deal, it's not $9.97. It's not $7.97. It's not $4.97. It's my best price I've ever done. It's $3.97 for a whole year, and you get grandfathered in at that rate, so you never lose your price. There's no catches. It's the best price I've done from 4 years ago. The one catch, 50 people, and then we're going to be done. The link you have to use, you cannot go to financial to get this. You have to go to financial.com/thirsty. As long as you use that link, then you'll be able to get the deal. If you don't, you're going to end up paying 1,800 bucks. So let me just go ahead in here and I got to type www.financial.com/thirsty. And I'm going to send this to everybody. There it is. Now, what usually happens when you guys click on the link, y'all do it at the same time. It might take a 5 or 10 second delay. That's just because too many people are hitting it. Just give it, don't double hit it, just hit it one time. Now, here's what else you're going to get. These are my bonuses to you. You will get a copy of my hot stock list for the whole year. November, December, January, February, you get the idea. I'm going to be selling that as a standalone product. That is not your problem. You are going to get it for free. All right. Let me just do one thing here. Make organizer. Yes. All right. So Reagan is here with me. She's going to put the link in there for me as well. But you do, yes, Mary, you have to go to financial.com/thirsty. Now, next week, I'm going to have a members only session. When you join today and you get my best ever deal of all time, I'm going to send you how-to videos. So today's what, Thursday? You're going to have a chance to quick watch them. Next week, you and me are getting together before the holidays, and we're going to have an event. I'll give you, and you're going to get a copy of the replay. You're also going to get a copy of my entry and exit system, which I think I mentioned this, I'm not sure. Right now we're doing this webinar, it was 4 o'clock in the afternoon. Like I said, if you're a teacher, if you're working 9 to 5, you can't attend this. So you're going to be listening to the replay. This is all end of day. There is no me sending you an alert. That does not happen. This is you being in control of yourself and you not needing me. That way you're going to be self-sufficient. So it's all end of day, have dinner with your family, put the kids to bed, and then check what the stock did and put an order in the next day. This is something else you're going to get. 4 years ago, I did a members only webinar, and you guys loved it so much as members that you said, oh my God, this is great. Will you keep doing them? 4 years later, I do about 2 member webinars a month. You're going to get that free too. Each member's webinar goes between 1 and 2.5 hours. All we do is we look for trade ideas. It's crazy. So that way, I really want you to be self-sufficient. That's the whole point of this. But if you want me to help you identify the better ones to make you even better, I do it, and I love to do it. If you figure between, most of them go 2 hours, twice a month, that's easily 10 grand if you would consider that to be private coaching. You're just going to get it thrown on top. That's why when I call this the mother of holiday specials, it's no joke. Please grab it. Jeanette and Hubert, they bring me back only 2 or 3 times a year. As far as I know, this is it. There are no more. You're getting my best price from 4 years ago. Other people are paying more and are going to pay more next year. That's not going to be your problem. You're going to get everything I've shown you plus a crap load more. I'll show you more stuff you're going to get. It's called Platinum Access to Financial. You can stop wondering what your stock is about to do. You're going to be able to go to Financial, type it in and say, I can follow that dotted line. I see what these big institutions do to that stock. This could pay for itself just by keeping you out of a bad trade. Think of it that way. And then being surgical with your money and saying, oh, I was going to buy Apple in September. Bad idea. The stock usually goes down. Instead, how about buying Disney in November? How about buying Netflix in January? All these things to consider. Now, you're also going to get these things, which I'll go into a little bit. We covered the first 2, which are search seasonality and screen seasonality. One thing we haven't really dug into, I told you what our algorithm is with stock score. It gives buy and sell ratings, but check this out. If you type in spiders, which is the S&P ETF, I think this would be helpful for everybody, and you're going to get access to it too if you join. Well, at the moment you join, you're going to get access. Go search and go stock score. Look at the S&P for the last year. Hang on, 52 weeks. There we go. Check this out. Here was the pre-corona crash. It went on a sell in February, went right back on a buy, and then it went on a sell when it was closing at around 300. The S&P was at 300. It then fell into the 220s. That was about a 25% drop. I play tennis, and there's a friend of mine, and when the market just started to sell off, he told me how much he lost. He lost more money than I thought the man had. I never knew how much money this guy actually had. And he was literally going to cry. That was before we actually hit bottom. I can only imagine how much he would have lost. Then, by the way, if that was you, it wouldn't have been you because you would have known when to sell. This never had to happen. Then it went back on a buy on April 6th. Here's my question to you. Have you been long the market since April 6th and felt good about it? That's the last time our algorithm went on a buy for the S&P. 264, and now you're up, what, 90 points? Are you up $90 on the SPY? If not, you might want to think about financial. So we have our algorithm. This does incorporate seasonality, technical analysis, fundamental analysis, and sentiment all in one. But you're going to get this too. You can type in spiders. And by the way, this gets even crazier. Scroll down. If you held the S&P as a buy and hold, it's 463% return. So you bought the S&P day one, you're at 463%. That's pretty awesome. If you only held the spiders long when we rated it a buy with our algorithm, you're almost up double. Because when it goes red, you don't short, you just simply exit the position. And then you avoid those massive drawdowns. Because if you're a buy and holder, you had a hold during that 25% decline. And that probably drove people nuts. It was so pervasive. Well, you would have been out way before that. So we're pretty proud of this. And you can do that for individual stocks. You can do it for Netflix. For example, if we scroll down, there's a if you held Netflix from the day it went publicly traded, you're at 44,000%. Using our algorithm, it's only a little bit better. 186,000%. Yeah, it just gets silly. So you're gonna get access to this too. We also have a covered call screener. Again, $397 for a year, and you get grandfathered in every single year. You never pay more for platinum access. It's less than 40 bucks. I think it's, what is it? I have it down here, $33.08 a month. Well, we have an income screener. It's a covered call screener. There's companies out there that sell just a screener for 50 and 100 bucks a month. You're getting that thrown in for free. We have value investor stocks at Buffett style fundamentals. We do have newsletters, which are trade ideas that we send to your inbox. You get watch lists, which is really neat. If you come to financial and you click watch list, you can actually put a stock in a watch list and remind yourself every year so you never forget. So guess what? On gold, I have my gold alert set for December 20th. I never want to miss gold. I never want to miss Disney. I never want to miss Netflix. So you can actually put your date in there. We can also tell you when your stocks go from a buy to a sell. We have that alert too. We can notify you. You're getting that as well. So it's everything you see. It's $397 a year. You are grandfathered in at this price. I'll take your questions. Please fire away. One of them is this a lifetime membership? I do not do lifetime because I don't want to. Lifetime is considered 15 years, I think, by the government. I could be dead in 15 years. I have no idea. We just adopted a new baby girl, and from the looks of it, I'm so dead, it's not even funny. She's going to have me wrapped around her finger. But I don't do lifetimes. I keep the price super affordable. I want this in as many hands as people's hands as possible, is what I'm trying to say. There's other companies that might, they might have a $2,000 product or a $1,500 product, and that's fine. It's just not what I want to be doing. So we're doing $397 with Jeanette. You can thank her. She said, listen, we want your best deal again. So I brought it back. Now, there is one other thing I have not mentioned. Sometimes I'm a terrible salesperson. I'm a trader, not a salesperson. Let's do the highlighter. There is a window that's going to pop up, and you're going to have the opportunity to pick up, hang on, a second year for $297. What does that mean? Year one is $397. I call this the mother of all holiday specials because you can actually pick up a second year today only for $297. And then year three, it goes back to $397. We're just calling it a super bonus. You can get access for that and save another 100 bucks off a second year if you want to do it today. So when Jeanette said she's like, will you just give me the best of everything you ever done? I said, sure, you got it. So that's what we're doing. All right, there's some, let me just hit this. Came in late. Robert, I don't know if TradeThirsty recorded this or not. I do not know. You'd have to ask them. All right, is there an, okay, John, I hit you. I'm going to delete that. Okay, Reg, I got you. Yeah, right. Oh, thank you, John. That's awesome. Do you explain options? Okay, this is from Stan. Stan, here's the thing. I learned a lot of bad things and a lot of good things along the way. So we do have some options education that we can help you with. I do have video on demands. We can help you in my live webinars that I do about every other week. So we're going to be doing one next week. I'm going to show you specific strike prices, expiration months, the price to pay, and you're all going to put in a paper trading account. I am not a licensed financial advisor. I can't tell you guys what to do, and I wouldn't want to do that. That's not me. I want to teach you guys. So if I get run over by a reindeer this holiday season, you're all going to be fine. All we're doing is trading with data. So it really sets, to me, it's a huge confidence builder, and it's a lot less stressful because you're not thinking, geez, I hope that Ron guy that, he seems sort of okay. I hope he's a good trader. That has nothing to do with anything. We're looking at data. So when someone says to me, oh, I think this stock is going to be a really good one, my opinion is, wow, that person's really nice. But without the data, I don't know if it's going to be a good one or not. It's like, show me the proof. I've had enough with opinions. Which brings me to my next thing. How many times do you watch CNBS and they only ever bring in the stocks after they moved? I was in the car the other day and they talked about, I forget what it was, semi stocks. They love talking semiconductor stocks. And they're up 30%, in 2 months or something. And then they actually say this. Is it still a good time to buy or sell? And I'm just like, I get so irritated. What value does that have anymore? Why don't they tell us the stuff before they're gonna move? Hey, by the way, did you guys know that Disney really does well in November? Like, wouldn't that be a great value add to that broadcast? But no, they wait for the stocks to go 20, 30%, then they talk about them. And then it's worthless to everybody. And it's just a waste of our time. So don't get me wound. I hate that stuff. It drives me crazy. All right, hey there, Joe. Great to see you. Hey there, Ray. Is there a prize for being the first to sign up? I do not know if you were the first to sign up, but no, the only prize is me. The prize is you're getting locked in at $397 every year. You got it. Hey there, Ron. Do you explain option trades or vertical spreads? I do have a ebook I could help you with, Ron, on that, but with options. But also, I can show you what a spread would look like. So we get together next week. I can do that. Yep. Can you trade just stock? Marcy, absolutely. You don't have to use options. What I would love to do is to teach you how to trade options. You don't have to, but I'd love to teach you. If options are used correctly, it's less risk per share than stock. And I love that. All right, I am not keeping track of the counter. I wonder if Reagan's going to yell at me. All right, she says 24 spots. So we're halfway gone. Oh, fantastic. All right, any other questions? If you got them, fire away. My guess is we are going to be done. Usually, I got done a little earlier. We might be here 10 more minutes. Mark says, hey, thank you, Mark. So Mark T just said, this is better than the price you paid. Mark, here's the deal. Send me an email because you're already a member. We will, Mark joined at $497 a year last year. So Mark's been paying $497. Mark, we'll move you down to $397. That's not a problem. Just shoot me an email and we'll lower your renewal rate. And Mark, I'll tell you what, if you're already a member and you want to add a second year for $297, do that too. We can help you out with that. All right, so you're good. Hey there, Keith, how are you? Keith's got a question. I know that name. I thought so. From the Scottish borders. Okay, you're all sorted out. That's great. Let me see what else we got. All right, Reagan just pinged me and said, we are now down, man, you guys are fast. 17 spots left. We're now in the teens. Yeah, Reagan, I can't see the chat box, so thanks for texting me. All right, we're down to 17. Now, well, there's another, this is a long one, hang on. Reg, if you, oh, I see. I'm gonna read this. If you don't know Ron, he works as hard as Hubert does. He consistently delivers far more than promised, and the tool for best period is worth a full subscription. Well done. Thank you. Thanks, Reg. There's very few, yeah, I've met a lot of people in the industry. There's very few that I would say that I like and I'm friends with just because, you know, what it implies. But I do. I like Hubert and Jeanette very, very much. They're both stand-up people. Hubert actually is one of the first people that ever helped me get started with our own company. He was one of the first people that ever sent an email for us, inviting people to an event. So I'm always forever grateful for that. And that was, geez, 12 years ago, 13 years ago. Yes, I can't read the second part, but yes. Well, Hubert is from Kentucky, and I do speak a little different as well. So you can, if I get on a roll, my Dutchy accent starts coming in, and my sentences are sometimes backwards, which is ironic because my wife is a language arts teacher. She has a special degree. So when she hears me talk, she just looks at me and she goes, "And you're a public speaker. Oh my God." She's funny. So I'm always getting corrected. I'm like, well, hey, north of the mountain, that stuff counts. She's from south of the mountain. Those Southerners. All right. Hey there, Tim. Oh, awesome. Great to have you. Because I'm doing a screen share, I can't see. But so far, it looks like a bunch of you guys are taking the second year. So congratulations. It's the only time I do it for new members is right now that you can pick up a second year. All right, this is from Casey. Casey said, can I get the 297 tomorrow? Casey, no, you got to do it today. So here's the deal. If that pop-up window did not appear for you, all you have to do is reply to your welcome email and just say, hey, I want the second year, and we'll credit you to TradeThirsty. That's how you do it. It's super easy. If you miss the second year, just send us a quick email, reply to any message. Okay, Reagan says we're under 10. So what is it? Dinakar, Warren, Barry, Ethel, Roger, Jack, Laura, Damien, if I'm getting this right. Welcome aboard to all you guys. Single digits, we're down to 9. Any final questions, gang? This is from Mick. Hey there, Mick. Yes, we do ETFs. So Mick, you can type in SMH, you can type in IYT for the transports, you can type in FXE for the euro, FXY for the yen, UUP for the dollar. As long as there's a US ETF, you can do it. Now, you can also do Canadian data. Let me move my screen. Erase drawing, normal drawing mode. Let me show you this. You see that Canadian flag right there? When you activate that, you can now gain access to Canadian data. I want to add Australian data, but it's just too much of a project. We're not there yet. So right now it's US and Canadian data that we offer. Tim, yeah, the member webinars, Tim, they are really that good. They are amazing. I think so. Because we get to see the trade ideas that we're going to watch for the weeks ahead. We talk about strike prices. The proof's in the pudding. Daniel says, I saw you before. And you love the trade ideas. That's fantastic. Because I told you guys in my PowerPoint, let me just show you something. Like this is no bull. Hang on, let me show you. Let me scroll back up to the beginning. When I was with you guys in May of 19, this is what you saw. I gave you 4 trade ideas, and this is what happens. Then I told you about Disney. We talked about that, right? That was amazing. Paid people's vacations. Then it was gold. Then that paid for people's vacations. That was where it went from $276 to $845. If you traded 10 contracts, my God, 2,700 is 8,400. Then in May of this year, Jeanette had me back. You guys were asking for me. We did those 4, and they all win. Then in August, we did Intuit, MasterCard, NVIDIA. They all win. And now you see what we're talking about today. And by the way, the ones in August, you heard that, oh, sell in May and go away. The summer's horrible. Wow, that was a really bad August, guys, wasn't it? I was with you in August, and these are 3-week trades, and that's what we saw. And this is after some of these were already running. So you got it. You're most welcome. Maryland, yeah, we really do sell it for $17.88 a year. I'm not kidding. That's how amazing of a deal this is. All right, we are now down to 4. All right, guys, any last questions? Please fire away. When will be the next live webinar? It will be early next week because of Thanksgiving. Well, here, let's look. Thanksgiving's Thursday, right? The 26th. So if we do a members event, it's probably going to be here or here if we do a members event. What I do is I send out the email the night before. So everybody that joins, you'll get an email to that. This is prime time. This is when the sun shines and you make hay. The second best trading time of the entire year, January 1, unless gold goes before, but January 1. So there's no better time to get in there. You have the holiday coming up. Practice, practice, practice. Follow these trade ideas. You will see how easy the end of day exits are. You just get out the next day, come home from work, see where the stock is, above or below the red. Below the red, you're out and you're done. It will literally take you longer to log into your account than it will to figure out the exit. I'm not kidding. The members agree. And you will be present with all the other members next week. They show up in droves. When am I talking about the members event? Next week. So right before Thanksgiving. Ray, I'm sorry that you are, okay, your internet's just a little slower. The trade ideas that we went over right now, what was it? BCO, SBGI, and Prudential. Those were 3 good ones right now. And then I set you up, because we already did Disney. Disney's already running, but I told you that in August to get ready. So if you guys did the Disney trade, send me an email. Tell me how well you did, because you knew about it 3 months ago, and it did it again. So we know we're going to watch gold at the end of December. We're going to watch Netflix in January and Domino's towards the end of January. All right, welcome aboard. Reagan, I see we got Robert W. That might take us down to number 3 or 2. Yeah, Tim. So the ticker symbols that we went over today, BCO, PRU, SBGI, plus a whole bunch of others that I showed you, but we specifically talked about BCO and SBGI, but I also like PRU. B as in Bravo, C as in Charlie, O as in Oscar, Brinks was the ticker. Okay, Reagan's now telling me we are down to 2. Guys, last questions. I want to say thank you so much for coming. I am so sorry about last night. My internet dropped. Apparently, like the whole town dropped. They had a massive internet outage, which makes me feel better that it wasn't just me, it was the whole area. So we got together today. Thank you so much. You have any questions, you know where to find me. Just reply back to one of those emails. This is the absolute best price you're ever going to see. We are in prime time. There is no better time of the entire year. If you've attended this event before, you know I deliver. I give you these trade ideas. You sit back and you say, oh my God, they keep working. Could you imagine coming into financial and typing in all your stocks? So instead of guessing what might be around the corner, you can actually see based on history, wow, my stock actually tanks next month. Or wow, this stock's about to take off. You can now be very surgical with your capital and go from spot to spot to spot instead of just sitting there all year holding a stock. I mean, there's nothing wrong with buy and hold, but geez, why would you hold a stock the whole year when there was only one 3-month window where all the money was made? And Buffett has said the same thing. They talked about how if you miss the up days in the market, you're going to underperform the S&P, which is why buy and hold, in his mind, is worth it. I would argue we actually have the data, and the data says, why would you hold the stock for the whole year if all the money is made in a month or 2? And I would have to agree. The data will set you free. So you can start trading with a lot more confidence. All right, guys, we're down to 1. So here's what we're going to do. If anybody bought twice, we'll make sure that we void that order so you're not caught with the double purchase. As of now, 1 package is left. If that hits sold out, the page will just freeze and it will not go anywhere. If you have any questions, any issues, or your card was declined and you're not sure why, shoot us an email. Just reply back to any email we sent you and we will help you. So to all the new members, it is great to have you here. welcome aboard. You're gonna get my how-to videos. You're gonna get all kinds of good stuff right away. And then early next week, a couple days from now, we'll get together and have a live event. I'll record it and I'll send it to you. The link you have to use is financial.com/thirsty. That's the link to get the deal. The other link, you're gonna be paying a lot more. Tell Hubert, William says, tell Hubert I'm down in Lancaster. I'm going to sit with him. Oh, that's awesome. Tell him I said hi. All right. Hey, thanks again, everybody. Thank you to Jeanette, Hubert, and the team at TradeThirsty, Silas, and everybody. I appreciate being here. It's always a joy to talk to you guys. So happy Thanksgiving and happy holidays. All the best. Bye-bye. Yes, Mary, the link is financial.com/thirsty. If you just click the chat box, you will see that link, or just type this link in on your screen. Yep. And you will get the 3 bonuses. You will get those too. Yep, you got it, Mary. You're all set. All right. Cool. There we go. All right, take care, gang. Again, happy holidays. Bye-bye. Oh, okay. One more. Marcia, if you didn't get the 297, you have to email us, because once you go by that page, it doesn't pop up anymore. There is no order page. So if you wanted that second year and you said, oh crap, you missed it because your pop-up blocker was on, Marcia, you got to email us. Just reply to the email and say, I want that second year, and then we'll credit you to TradeThirsty and you'll get it. All right, now I'm out of here. Take care, gang. All the very best. Bye-bye.